When you get your health insurance through the marketplace, there may be tax credits available to you for the premiums that you pay, which is great. We love tax credits. When you sign up for your plan at the beginning of the year, this tax credit is assessed in advance and can lower the amount of your premium each month. Again, we love tax credits. And this sounds like a great deal, but know this, when you sign up, you are actually estimating your income for the coming year. And the best way that the marketplace knows to do this is to estimate it based on what your income was the previous year. For example, if you signed up in January of 2019, it's going to ask you questions like, what was your adjusted gross income in 2018? And then it'll estimate it. And when you file your tax return for 2019, that's when you'll have to reconcile all of the differences that come up between what you estimated your income to be and what your actual income is. Again, you're still receiving the tax credit. It's called the advanced premium tax credit when you receive it each month before you file your taxes like that, the APTC. But if you're receiving it in advance, or if you're receiving it when you file your taxes, what difference does it really make? You're still getting the tax credit, right? Well, the issue comes in when your income increases and it's more than what you estimated it to be. And this often happens. We see this more often than not, especially as you're coming through the workplace, you're gaining knowledge, you're gaining skills, and you're going to hopefully, accordingly, increase your income as well. So if you base your income based on what the prior year was and it goes up during the year, then when you reconcile what you estimated your income to be and the tax credits that you receive based on your estimated income against what your income actually is and what your tax credit should have been based on your actual income, then we have a problem. As clear as mud as that is, let's just think about what can you do about it, about resolving the issue. Well, if you notice that your income is higher, then what you're supposed to do is get in touch with the marketplace, update your application. You can do it online, by phone, in person. I'll have a link in the description of this video to show you where you can go for that from the healthcare.gov's website. But the important thing is that you do it. This is a great time to do it. Half the year is through. We're in July, we're through June, so go ahead and see what your income was through June and then understand if it's going to be different than what you estimated it to be, that you need to update your application. If last year, especially if you had unforeseen circumstances like a job loss or if your business wasn't doing so well, you're most likely going to have a better year this year and you want to update that application. You can also update it if your income went down, but more often than not, we see it go up, and that's what this video is addressing. This will help you from having to pay a big chunk of that tax credit back all at once, and I think it'll help you out a lot. So it may keep you from reducing your refund a ton. I've seen people have to pay up to tens of thousands of dollars of their premiums back because they did have a really bad year the year before, and of course that's what they're estimating it on, but that's not the year that you're receiving the credit for. You're receiving the credit for the coming year. So it just gets very confusing, but you have a little bit of knowledge now. Just know that you have to update your application. A little bit of knowledge can go a long way. Stay informed, stay wise. We'll talk again.